Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Jack Henry Incorporated, and let's just say their latest report might have some interesting things to say about how they're handling their business, especially when it comes to a key metric they're tracking. Jack Henry and Associates Incorporated, a company that plays a big role in the financial technology world, has just put out a report. This isn't their yearly checkup, but a more frequent update focusing on their recent performance and what they're calling deconversions. Think of deconversions as when a financial institution decides to switch from one service provider to another, which can be a pretty significant event for companies like Jack Henry. So, what is the big deal here? Well, they're specifically highlighting their deconversions for the first fiscal quarter that ended in September of 2025. This tells us they are paying close attention to how many customers they're losing and the revenue impact of those losses. In the world of tech services, especially for financial institutions, keeping clients happy and preventing them from switching is super important. So tracking these deconversions is a smart move to understand potential revenue shifts. Jack Henry's stock, which you can find under the ticker JKey, is traded on the Nasdaq Global Select Market. This means it is a pretty well-established company. They're incorporated in Delaware, which is a common state for businesses to set up in, and they have a long history indicated by their commission file number. These updates, often called Form 8K reports, are crucial because they give us a snapshot of what is happening with the company's business operations and its financial health, often in real time. It is like getting a midday report card. Now, while the filing provides all sorts of details about the company's address and how to contact them, we're more interested in the juicy financial bits. That is where the real story often is. Attached to this report is a press release, and that is often the easiest place to find the key financial highlights that the company wants to share. So we'll dig into what that press release likely says about their deconversion revenue and what it means for their overall financial picture. Looking at the numbers from their first fiscal quarter of 2025, which ended on the 30th of September, the company's financial performance regarding deconversions is worth a close look. While this specific filing doesn't lay out a big financial table of revenues and profits, it points us to a press release for those details. What we can infer is that the company is actively managing and reporting on customer churn, which is a critical indicator of customer satisfaction and the competitive landscape they operate in. If deconversions are on the rise, it could mean they are facing increased competition or perhaps not keeping up with the latest needs of their financial institution clients. Conversely, if they are managing deconversions effectively, it signals a stable or growing customer base. In the world of financial technology, customer retention is paramount. When a bank or credit union decides to switch its core processing or technology provider, it is usually a complex and costly decision for them. This means that if Jack Henry is seeing a significant number of deconversions, it could be a warning sign that their services or pricing are no longer as attractive as they once were, or that competitors are offering something more compelling. This isn't just about losing revenue from one client. It can set off a domino effect if other clients start to consider similar moves. To truly understand the impact, we'd need to know the size and significance of the clients that were deconverting. Losing a small credit union is very different from losing a major regional bank. Without those specifics in this particular filing, we have to rely on the company's own statements in the press release. However, the very fact that they are explicitly calling out deconversion revenue suggests it is a metric they, and investors, are watching very closely. The strategic implication here is clear. If Jack Henry is experiencing higher than usual deconversions, they'll need to re-evaluate their product roadmap, their customer service, and their sales strategies. Are they investing enough in innovation to stay ahead? Are their sales teams effectively communicating the value they provide? Are their support teams resolving client issues promptly and efficiently? These are the questions that will drive their long-term success. From a Warren Buffett perspective, we're looking for a company that has a durable competitive advantage and a management team that we trust to navigate challenges. Reporting on deconversions directly like this shows a certain level of transparency, which is good. However, the magnitude of these deconversions and what the company is doing to mitigate them is the real story. If these aren't just isolated incidents but a trend, it might indicate a weakness that needs serious attention. Ultimately, what this report and the accompanying press release tell us is that Jack Henry Incorporated is focused on managing its client relationships and the impacts of customer transition. The key for investors and observers will be to track this deconversion revenue in future reports. Is it a temporary blip? Or is it a sign of a more significant challenge in retaining their customer base? The strength and stability of their long-term contracts in the financial sector are critical, and any signs of erosion there warrant close scrutiny. Alright, that is our breakdown of Jack Henry's latest filing. What is your take on the focus on deconversion revenue? Do you think it signals trouble or just standard business fluctuations in the tech sector? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more corporate document deep dives. And don't forget to check out our Discord community for more discussions about business and finance. You'll find the link in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.